Good morning, everyone, and welcome to the European crossover webinar. And we've seen the dollar yen going to make a run up in here, close to the 107.50. I don't know if we were discussing in the Asian session. I got short at 744. We've gone and paired back a bit here. Also seen the dollar CAD react, and we did just now go in and see the cable drop. One of the things I did go and post in the room is that we do have options expiration of 1.8 billion at 10 a.m. 10 a.m. Eastern, and for the cable at 123. So it may have a tough time trying to get too much further or much past 123 even here. We have seen the euro kind of struggle here, and that's been our bias chart resistance we had yesterday, which was 1060, and it's gone and tagged that and got pushed back. We tried to tag it again this morning, got pushed back again. One of the key things we are seeing that may ultimately be a little bit supportive for euro is going to be, if you look at bund yields, boy, quite the difference we've seen, or here in bund yields, we've seen bunds themselves come off quite a bit, obviously with the inversion to the yields. So obviously yields moving hard, but then again, we did see 10-year yields make a run up in here, and henceforth why we saw that good move here in the dollar yen. We can see here we came into a decent resistance level right in here, this 65.70 right there. I was posting in the room, posted the chart, said, I thought that was a pretty good area there. We could move up to 1.704, which would actually be the 38% if we've made one more extra push in here. But also we saw gold going and get a pretty good little whacking with the move up in yields. We actually came into some volume support at 1494, but the market did go on to continue to push lower. Now we've made a trip back to 1494, but you can see right in here, right there, nice little volume, but we did go and make the extra push right down in here into the upper 1480s before finally recovering back into this to revisit this volume area of 1494. We're actually about 1495 right now here with the gold market. And we've had a pretty nice rebound here in crude oil since yesterday. Let's go on and move back into the main screen. Actually, tell you what, we'll venture off into the cross rates. We did see Aussie yen at the same time when dollar yen was making those lows. We did see the Aussie yen come up right into our bias chart resistance area here, right there. You can see that. We've come off just a little bit, not a whole lot, but we had a pretty good run up into this area here. That's with the Aussie yen. And we've seen sterling odd going in after making a pretty good little run here, close to the bias chart resistance coming in here, getting turned back a bit here. Obviously, same thing we've seen sterling come off, and we've gone and made it down here. And currently, we're trading it at 23.10. Peso did recover yesterday. We talked about this, mentioned this in the daily roundup, and we had mentioned in the chat room, the head 1950 is our bias chart support, and we came right down here into this 1947.70, basically right at 1948, and we've seen a decent little rebound here, not anything of any great significance, but we did make a run back up to the 1960 level before being turned back a bit. And we'll take a look at the data out for today. At the bottom of the hour, we do have a claimant count here in the UK, unemployment rate, employment change, That'll be out at the bottom of the hour. Then coming into the States, we do have Canadian housing start data at 8:15 Eastern and building permits at 8:30 Eastern. Then JOLTS jobs openings at 10 a.m. Currently cables at 2307. And we'll go in and get to the stories. The yen franc sink is fading risk shine off safe havens. The yen and Swiss franc fell to 5-week troughs on Tuesday as investors look for higher currencies emboldened by a report of the German stimulus plans, diminishing chances of a no-deal Brexit and hopes of a trade war break, though. Silver and gold were also sold in the slide that pushed yen as low as 107.49 per dollar and the franc 99.22. Over the past 24 hours, there's been a move towards more risk-friendly pro-growth currencies, Rodrigo Catril, FX strategist, said. And but it's kind of a kind of a lull period following a whole stream of positive news last week. We're in a wait-and-see mode with major risk events like Brexit and trade negotiations being kicked down the road. The pound stood just under a 6-week high of 23.85, hit overnight after British law blocking a no-deal Brexit from the European Union came into force. The South Korean won and New Zealand dollar drifted higher, the won holding closer to a month high of 191 per dollar, and the Kiwi close to a 3-week peak of 64.34. Exuberance was held back, however, by weak Chinese economic data that hit equities markets, with factory gate prices shrinking at their fastest pace since August. Traders also remain cautious ahead of key European Central Bank data meeting on Thursday, at which policymakers are expected to ease monetary policy. The euro was flat at 10.43, underneath an overnight high of 10.67 hit following a Reuters report that Germany may set up public investment agencies to boost fiscal stimulus without breaching national spending rules. The news has caused some people to revise down their expectations for Thursday's ECB meeting, although I think that's entirely premature, said Marshall Gittler. I think the small rally in euro today just sets up a currency for a big fall on Thursday. Interesting. Market hopes for a trade breakthrough, meanwhile, rested on confidence overnight from U.S. Treasury Secretary Steve Mnuchin. He told Fox Television that there had been a lot of progress on U.S.-China trade deal, and the U.S. side was prepared to negotiate. Remarks push U.S. trademark benchmark 10-year treasuries to a 3-week high once they were in Asian trade. Sterling barely shifted when Britain's parliament voted, as expected, to stymie PM Boris Johnson's bid for an early election, which prompted him to vow that he would secure a Brexit deal at an EU meeting or summit next month. While I loathe to go anywhere near the pound, I see what I like what I see in the price action, said Chris Wilson. And lastly, with the bonds, 30-year bond yield rises into positive territory. Germany's 30-year bond yield rose briefly into positive territory on Tuesday for the first time in a month, lifted by uncertainty over how much stimulus the ECB would add and expectations of a Sino-U.S. trade agreement. Germany also kicks off its general budget debate in Parliament, and Finance Minister Olaf Scholz's speech will carefully watch after the Reuters reported Germany was considering creating a shadow budget to boost public investment above and beyond the limits by national debt rules. The 30-year yield rose as much as 4 basis points, its highest level since early August, before returning to negative territory. While in the debt plan will rescue the Eurozone from recession and low inflation, no, it's a welcome move, but it would be too limited, said ING strategist Antoine Bouvet. It has pushed the market in what was way likely to go anyway, but the real story is expectations from the ECB and improvement in political sentiment. A return of the 30-year bond to a positive yield would mean the entire curve of the Eurozone's benchmark bond issuer would no longer be in negative territory. Global risk sentiment has helped somewhat after U.S. Treasury Secretary Steve Mnuchin's comments that there was a lot of progress being made. However, in a reminder of the gloom facing the world economy, Chinese factory gate prices shrank at the sharpest pace in 3 years in August, falling deep into the deflationary territory. For the moment, the bond market is very much focused on the improvement in trade tensions, but it's very theoretical at this stage, with officials taking out the next round of risks rather than the meaningful concessions being made, Bouvet said. The improvement in some is there. How long it will last is anybody's guess. Investors should be cautious. And we're seeing the euro continue to slide a bit here, and cable coming right into this little support zone. I think we did have that as our bias chart support. So we had 22.37. So this is right here. I guess it was just a minor one. Probably was resistance from before. But let's go on and move into the euro. So the euro is kind of holding its own right here in a relatively tight range ahead of the ECB. Talk about the Germans finding some sort of stimulus without breaking their own budget rules has provided a little bit of support for the euro, or I'm saying an additional bid. And henceforth, we've seen the boons come off. As indicated, bond yields went into positive territory earlier. So that's actually in the long run overall is bullish, for the euro as far as the bid on prices. But we shall see. But we're certainly not seeing a whole lot. I guess we're still basically on hold until we get past ECB. So looking further out with the euro. We had 1060 for our bias chart resistance, and that's pretty much keeping this market in check, with support coming in at 989. And I'm not going to see, now there's a little bit of support coming in right there, 1006, but this is where the real demand is going to come in. So right here at 989. So we're going to go and keep this the same, and we'll move into cable. There is some demand here, and we found it right here, coming in right there. I guess it was probably resistance before, which is 2307. I think the market's going to have a tough time trying to get past that 123 while we've got the options expiration for 1.8 billion. Tough time to get beyond that. Now, if we do slide, I think that we will see demand come in right there, 2280. But don't forget, until 10 a.m. Eastern, we do have options expiration of a 1.8 billion at the 23 handle. So let's take a look here. That is going to be right there at 22. It's called 2282. And that 2307 was the resistance, so we went to challenge that and then ended up becoming support. So resistance on the upside here for that 2380 is going to come in right there, 2362 for now. Let's go move this up here. We'll call it 2363. Now we'll move into the Aussie. Well, we came out of here and tagged right into this. You can see here, right with the Aussie, came in right into that 68.76. We're off not a whole lot, but off 20 pips from that. That is 75, and that's going to remain the same. And we'll move this just a bit higher here, right there for today. 68, 20, 68, 23. We're seeing the Kiwi turn back a bit. You can see here on the daily, we have just from yesterday, a little bit of a graystone doji. Started seeing that right now. So it's certainly a pullback would seem in order. This is a huge area, the 63.89, and we'll look for the market maybe just to push that a bit. So we're looking for support coming in at 63.71. And we've got 63.70 already in place. $64.37 on the upside. Just tighten this a bit here. Keeping it fairly tight. With that, we'll go and move into the CAD, dollar CAD. Now, we did see the CAD go and find some support here yesterday. We had mentioned our initial support. Now, there's a potential for us to move lower, but initial support would come in at 31.36 from yesterday. You can see that in there as we started the week off. Allowing for a challenge at 34.43. Initial support is 31.36. Well, we did make it down to 31.40, and 31.56 is the 61%. We're starting to work higher from here. And now what we're looking for is the resistance is 32.36. Only a daily close above 32.52 would negate this downturn, downside. So a little bit of a move in here. So for now, support's going to come in right there at 31.62. And on the upside, we'll be looking for 32.05 right there. The overall 32.36 is going to be the resistance, but on a little bit closer basis, especially after the rally after this, be 32.05. Now, looking at the peso, we mentioned yesterday there's some nice support here. Now, we're looking at 1950. 1950 is 50% of this entire move, but very nice support coming in right there at those lows at 1947.4. We're going to go in and keep this 1950 that we had as our bias chart support. for today. And then the upside, we had 68. We did go on and run a little bit of trouble here at 60, just at 1960. Not much, it's just a little bit of resistance. But I'll tell you what, we're going to keep that 68 in place. And with that, we'll move to Dalian. Now, Dalian came in right into this, just about nicked it by, which is this 1950 level, but that's confluence with 746 to 61% of this move from 445 to 931. So he came right into that 61%. Obviously, that coincided with U.S. yields pushing up to their highs. They've since come off of those highs and allowing for this Dalian to work a little bit lower here. So resistance at this time is going to be 741. We did have 730. Let's move up to 741. We'll just put support coming right there. $704 for Dalian. And let's go into the dollar index. Now looking for potentially 98.14, and we're going to stay with that. We're in a tight range here. This 98.14 to 98.63. We're going to go and keep the 63 here and the 98.14. So that's going to remain the same here with the cash dollar index. As I said, we're trading in a relatively tight range here. And with that, we'll go and move into the cross rates. UK data coming up at the bottom of the hour. Well, looking here at the Kiwi yen, you can certainly see this is the classic gravestone doji. Now we haven't completed yet, so we'll take a look at the intraday. So resistance right now is going to be 69.09. Support's going to come in right there. 68.52. 68.52 for support. And then the euro yen just coming into a little bit of resistance here. Resistance is going to come in right there at 1865. Nice little move. Obviously, that was with the yen weakening, but nice little move that we made here, taking out those highs and we've come off. And support is going to be right there at 1813. So support will come in right there at 1814. And we do have UK data coming out. Here we go. .4 on the average weekly earnings. And cables at 23.31. Relatively muted price action here on the cable from when the number was announced. And let's go and get back. We'll go and move into the Euro odd. Well, we've managed to pick ourselves up off the lows, but it isn't of any great significance, but we have picked ourselves up off the lows. We did have our bias chart resistance to 61.37. We're going to go and keep that the same here as Aussie pairs back a little bit, so that may open the door for us to go up here and challenge at 61.37 with support. Going to come in right there, 60.60. Now let's go and move into the Euro Kiwi. We had this marked off, what, 72.53 or 56, 72.51. So we're going to go and keep that. The difference is going to be that the support's going to come in right there at 71.33. And actually even doing a little bit better than that too. We'll go right there, 71.47. Right there, 71.47. And let's go move into the Aussie. We did come up here to just basically almost tag this, so no changes on the upside for the Aussie yen for resistance. And on the downside, we're going to keep that the same, 72.87. If we do see a rotation lower where the market will be looking to go for, 72.87. So we're going to keep that the same. We're at 73.86, and if it bopped up a bit above 74.08, we'll take off the 74.08. And let's go move on to the guppy. We got just past this bias chart resistance. But I think the yen has taken a bit of a pause here. We'll see. We're at 32.75. Right there, 31.51. 31.51 is going to be buy chart support. Quite the move up here, weakening of the yen, basically. And lastly, we'll finish up with sterling odd. Actually, you can see it came right down there and tagged that. Right there. $79.29. And the upside, we're going to go and keep that, which is the 80. Let's see, I don't know, we had 79.87. Actually, have this level from up from above. It's going to be right there, 80.53. Let's go back into the metals here. And we came into that, we've got that drop down here. We made a little bit of a rally and got that, finally got that drop into the 1494, and it even overshot here. And let's go and take a look here. Just run this little stab area here. But this 1494, go. Really good little area right here. And we're trying to work up a little bit higher, but we came almost all the way down here to this, almost down here to the 1484. I know someone had looked at that level, I think about a couple of weeks ago, someone mentioned something about 1485. But I thought this 1494 was a pretty decent area. We overshot a little bit. We've reclaimed the 1494. And on the upside, really any pushes back towards 1506 will be a short-term area where they'll look to lay off some of those longs. And certainly with the boons, we've come off, and we actually went positive. On the boons. Kind of come back up a little bit, but you can see this zone area here, and we finally broke above. We re-challenged it, tested above here. You can see that, and we just ran out of gas and certainly rotated back lower again. We may see a little bit of a pause now. Obviously, the bit about the German stimulus has opened the door for the bunds to go on and move higher in yield, and we've also rotated lower here with the overnight with the 10-year yields. made a run up into the 65.70. Nice little resistance area before kind of rolling back here, just a bit off. So cables kind of come back off of that. We talked about this. I posted that in the room about the 123. We have 1.8 billion. I figured that we did make a run down to, what was it, look like about 2307 or so. Yeah, 23. And actually that was yesterday's resistance. So it's funny they came down to test yesterday's resistance, which would then be support. But I figured that that might be a little bit of a tough row to hoe with the options expiration with 1.8 billion at the 23 strike. U.S. trade relatively quiet. Dollar CAD's got a little bit of that bid after coming off that 31.56 at 31%. I mean 61%, and yesterday we had 31.36. The low was 31.40. 31.36 is our level, bias chart support level. And let me go on and post the bias chart. And there's our bias chart for today. And thanks for joining us here on the European crossover webinar. Maybe you'll be able to join us here on the FX Daily Wrap Up.